We look at the numbers, the dividend is up, and you're continuing with a $10 billion capex program. What we want to know is, should you be more conservative at the moment, given the tough background in commodities and the uncertainty in China? Is this not a little bit too generous on both fronts?
Yeah, that's the question, of course. But let's just look at the past. First of all, we had 20% return on capital employed last year. Over the last 5 years, we have had 28% return on capital employed. We have a very profitable business. Last year, we grew our business by 3% in copper equivalent volumes. So we are profitable growing. And I believe that we are facing an opportunity-rich world. The energy transition requires more materials of what we are producing, like aluminium, like copper, and even a bit more steel as well. So I don't think so. I think we have a controlled growth, and that's what our customer needs. That's what the world needs, and we can do it in a profitable way.
Right. Does still, though, a growth tilt, if you still have that, and if you're seeing growth opportunities, Jakob, does that not mean it's come at the expense of a dividend? Could you have pushed it a little bit higher then?
Now, may I remind you that we are one of the highest dividend payers with a dividend yield of 6%, 60% payout. And over the last 5 years, we have paid $50 billion of dividends. So I would say we are very rich in paying dividend. But we also, last year, we turned 150 years old. We are a very long-term company, and we want to be around for the next 150 years and be relevant as well, because we believe that we can create value. So the choice is, we want to pay dividend, but we also want to grab very profitable investment opportunities.
And we'll come to the M&A opportunities in just a moment, whether you're still on the road for lithium or copper. But what we do want to talk to you this morning is the market's marking you down. You're down by 2%. You expect to spend $1 billion on closure activities. Is that the upper level on what it's going to cost you to close down sites that you don't want? And could that hinder the dividend in a material way? So is $1 billion the top end of the closure numbers?
So yes, the reality is right now we are facing some of the world's largest closure, the closure of Gove, the aluminium business in northern Australia, the closure of our uranium business, EIA, and the closure of what was the world's largest diamond mine, Argyle. And that's the brunt part of the 1 billion. But you know, you have to just understand the mechanics here. We have already provided for this. So we have deducted it in our earnings years back. And it is a provision, and we're just going to spend the money now. Because when you open a mine, from the very day you open the mine, you have to start thinking about one day the mine life comes to an end and you need to rehabilitate. It's just part of the cycle of mining.
Jakob, one debate Manus and I have every day with guests is the scale of disinflation we're seeing in the economy every day. What are you seeing or not seeing when it comes to things like labor, parts inflation, or on a broader scale?
Yeah. So I think a year ago, it was very complex and there was a lot of bottlenecks. I think the Western world particular has, but not only the Western world, the Eastern world as well. I think the world has got its supply chain much, much better in shape. And calming that down has reduced inflation and has more enabled growth. So I think the world from that perspective is in a better place now, having COVID somewhat further away from now than a year ago.
Jakob, we look at images of the housing sector in China. We debate that on a daily basis, and we look at pretty brutal images of cities being flattened, demand being demolished. You're at the front end of delivery into that, aren't you? So how would you describe the gravity of the situation in China in terms of demand, real demand for iron ore, and the gravity of the economic situation?
So I cannot claim to be an expert in all aspects of the Chinese economy, but the Chinese economy that I and Rio Tinto are facing is the very physical part of the economy. And what we see is that the demand for steel is strong. We see the steel mills are running flat out. And why is that? Property has had now it's probably the fourth year of adjusting, and there was contraction last year. But there's a lot going on in infrastructure. There's a lot going on in a number of industrial sectors, not least the automotive with a near explosion in electrical vehicles. So net, the demand has actually grown last year. So we are facing a growing economy.
A growing economy in China. Jakob, what about the rest of the world? Stagnation nation in parts of Europe, an American economy that continues to be strong. How would you describe the global picture for demand?
Yeah, I think sometimes people are pessimistic because they say that it's a difficult world, and it is a difficult world. There are wars, there are geopolitical tensions, but it is a world that is growing. You're absolutely right. The US economy is growing well, the Chinese economy is growing well, and there's somewhat less growth in Europe.
So, Jakob, a year ago, there was this sort of very big moment, lots of commodity commentators, ex-Goldman Sachs people, etc., talking about a commodity super cycle. I'm interested to know, as you look at mine closures, you're concerned on certain fronts, is a commodity super cycle something that's in the rearview mirror? Are you still committed to that as the outlook? I know you're the CEO of a major mining company, so I know which road you're going to travel, but do you still believe that we're about to embark upon a commodity super cycle or something much more subdued?
Yeah, no, look, I actually said I was not going to predict a super cycle when that discussion happened a year ago. But I do think it's important to understand that the energy transition is happening. Addressing climate change is happening more than any place in China right now. So the build-up of solar and wind, increasing the grid, building EVs is a very physical transition, and it requires more aluminium, more copper, and more battery materials. That is a kind of a physical fact, and I think that is a train that has left the station. I think you will see that continuing over the next 10, 15,
but Jakob,
maybe 20
we
years.
are in this moment where, especially when it comes to EVs, you can see the pressure in just EV car companies slashing their costs. There's a demand issue, there's a pricing issue, the headwinds are real. How does that change your demand mix for lithium, for those battery assets? Does that mean you also need to pull back?
So the reality is batteries, most batteries has a lot of lithium in them, and the need for batteries are only going up, not just for EVs. Stationary batteries are growing much faster than EVs, and I get that EV demand will go up a little bit and down from quarter to quarter, but there's been produced EVs at a completely different scale than a couple of years ago. So battery demand is absolutely going up, and it goes hand in hand with electrification.
So I think last year you relieved everybody when you said that you weren't going into the business of producing electric vehicles or the batteries for them. So well done. Now we know what you are focused on. But here's the issue, isn't it? It's where are the assets that you have the biggest desire to buy? Is it in lithium? Is it in copper? I mean, you're closing. I understand you're rebalancing the portfolio, but where are the pockets that you need to fill from an M&A perspective?
Yeah. So first of all, I don't need to fill anything from an M&A perspective. We are very lucky in Rio Tinto. We have a lot in the cupboard. We have a couple of really exciting projects. One of the best lithium resources is in Serbia. I'm trying to unlock that. One of the best copper resources is Resolution in Arizona in the US. We're trying to uncover that and develop that. And then we have got an amazing exploration team that has a lot of prospects, and we're finding a lot. So we can go the organic route from exploration. We have projects that are ready to go into execution. I don't want to rule out M&A, but it has to be at the right price. I'm not interested in buying something just to become bigger. I'm interested in, if I can see that we can add value and create value, then we will consider it.